saw the huge amount of opportunity and value being created by startups and early stage businesses I was coming across. And I wanted to be a part of that. I didn't know how, so I went to business school to kind of figure it out. And while I was there, I met my Carlos Silva, who became my co-founder at Seedrs. And we started working on the idea of a platform that would let ordinary people, kind of like us, invest in these early stage businesses. And that was really where it all came from in the first place. We were excited by startups. We were excited by the opportunity to invest in them, and decided to build a platform that would allow for it. That was 12 years ago, and I remain as passionate about that as ever. I think that small, agile, innovative businesses are the future. I think that's where value and wealth and jobs and all sorts of other good things will continue to be created more and more. And I think that ordinary people of all sorts should have the opportunity to invest in them. And I love hosting a platform and running a platform that brings those two together. I think there have been a couple of kind of key things about Seedrs through the years. One has been that from day one, we've always treated what we do as a professional, financially focused form of activity. I think that rewards crowdfunding is a wonderful thing, and that's a different space. But in the investment crowdfunding, we believe that this is real investment. It sits alongside angel investing. It sits alongside venture capital, private equity, and even public markets. In the sense that we are helping to provide capital to businesses that they need to grow. We're trying to provide returns to investors, and everything we do is with that in mind. So I think we've always been maybe one of the slightly more serious platforms. We're not quite as sort of hurrah marketing as some, but and perhaps we could get better at that. But I think we've been very, very serious and advanced in terms of our professionalism. The second thing is we've tried to continue to innovate rather than remain a static platform. When we launched in 2012, the mere fact of companies raising money online for businesses, for their businesses, investors coming in, that was novel. But as time has gone by, that's now much more commonplace. And we have done everything from introducing a secondary market, which is now, I think, the most active secondary market in Europe for private companies, to funding fund campaigns, including Passion Capital, which we just funded, major venture capital firm, giving people the opportunity to invest in that. So blending the models a bit to new investment structures, and hopefully soon to greater international expansion. So we really have tried to stay at the forefront of innovation, bringing both our entrepreneurs and our investors the kinds of new products, new structures, new features that they want and that are helpful to them. And look, the third is, through those two things, I think we've gained a level of scale that has been unusual so far in this space. We've done well over €1 billion funded at this point. We've done 1,350 deals funded, and it's not that just scale and size are everything, but I think that we are now at a point where there's a huge pool of liquidity sitting on our platform wanting to invest in businesses. There's a massive range of deal flow across sectors that comes through our door, and as a marketplace, it's great to have that much choice and optionality for our investors and for our entrepreneurs, and we're proud of what we built in that regard. There are a lot, actually. I think that this is a space that has been very difficult sometimes to get the world to see it the way those of us who run platforms see it. I think that to a large degree there's often a perception that this is just for consumer businesses, that this is purely about raising money from customers. There is an element of that. It's great. I mean, we have some awesome consumer businesses, many of which have used us primarily as a way to get their customers to become shareholders. But that's really only one part of the business. We do a huge amount of B2B. We do a huge amount of business funding where it is just independent investors wanting to allocate capital to a portfolio of early stage businesses. So the extent to which that this isn't some sort of distinctive consumery proposition, but actually is a form of investment, just just like investing in the public markets or investing in property, I think is often misunderstood. I think a second misunderstanding is the degree to which it sits alongside other forms of capital. I think there's often a perception out there that you either raise venture capital or you crowdfund. You either go to angels or you crowdfund. And it's interesting because at one level, we compete with the VCs, we compete with the angels quite closely, and we're always sort of going back and forth, over individual deals. But at the same time, I think many companies, Seedrs included, have found that a capital mix makes a lot of sense. And so many of our businesses have some institutional money, some independent angel money, some money, some Seedrs money, and potentially other combinations. And that tends to work really well. And then if you do it right, and I think we've tried to do it right as a platform, it becomes very straightforward for all those different types of investors to sit alongside each other. So those, I guess, are two of the big misconceptions that I see. I guess if I had to add a third, it's just, to some degree, the pervasiveness in terms of, how big our impact has been. I think there are still some who see this as a niche space, the way maybe it was in the UK in 2013, 2014. And I think to some degree still is in continental Europe until the new regulation comes in. But this is a big business. This has the opportunity to be a really, really significant section of the private company investment and fundraising landscape. And we're already seeing that in the UK. We're about to see it with the implementation of the new European regulation. I think we've been very fortunate in the UK in the sense that we have a fairly big market to begin with, and then we had a regulatory regime in place from earliest days that was fairly conducive to the kind of work that we do. And so as a consequence, I think there's been a lot of opportunity here. There were a number of players, and most of them have sort of shifted models or otherwise left the market. So it is, fundamentally a sort of two-player business within the UK, crowdfunding itself. But then in turn, what that then brings is we and the other main player, Crowdcube, really do spend a significant amount of our time not just competing for the crowdfunding share of things. I mean, that's actually a small part of what we do. It's trying to get more and more businesses that maybe never would have thought about crowdfunding years ago to do so. And so again, this gets to where we both work together with, but also compete with institutions and other types of investors, recruiting more and more businesses, more and more different types of businesses, taking a greater share of the overall funding market, is something that we've been focused on, and something I think we've delivered pretty well these past years. So that's certainly been one important evolution. I think alongside that is the fact that this really has become so sort of cross-sector. I mean, I think that, the popularity for a few years ago, fintech businesses were kind of all the rage. One of the things we're seeing now is sustainability-related businesses have become, huge. And in many ways, what a platform like ours should be doing is reflecting what does the market want to invest in, and where do investors want to put their money. And they're putting their money, they're telling us a lot about what they find interesting by where they invest. So we see expansions of particular sectors. We see expansion of the range of different types of businesses that we're able to fund and that come to us for funding, and expansion of the types of investors who use us. So it's been a growth story, I guess, is the short way of putting it. First of all, I think the fact that I was put on that list is not a reflection of me so much as a reflection of how uncool most of the tech industry is. No, look, I mean, I think over the last decade in the UK, we've really seen a fantastic development of tech in the UK. I think, I can remember when Seedrs was first starting out, you'd have a conference, Mike Butcher used to organize these early conferences where you could basically, everybody who was relevant at all in the tech sector and the tech startup world was all together in a room that fit 100 people. I mean, it was a very small industry. Now, it is so expansive. There are so many people who've come in and built great businesses. Who do I really rate in the space? I mean, there are so many. I mean, I think I would probably focus in on both some of the great kind of founders and people who have built, some of the businesses that we've helped to fund. I mean, certainly, the guys behind businesses like Revolut have really built amazing things. The guys, not a company of ours, but what used to be TransferWise, Wise, the peer-to-peer lenders, have been, there's been a number of people who've done great work there. And then there are just some fantastic, investors out there, both institutional and individual. I mean, I'd have to, say, Tim Levine, who runs Augmentum FinTech, which is one of our shareholders, has really just pioneered fintech investing in the UK, and I think has done a really fantastic job of it. And we see just so many, Reshma and Carlos at Seed Camp, Burbage at Passion Capital, the people who are, Nick Brisbourne at Forward, the people who really have believed in seed and early stage as an asset class and have made some great investments as a result. Just a short list, all people who are far cooler than I am. Look, I think you're absolutely right that it's normalization, it's increasing normalization of online activity has to some degree benefited all of us who were still pushing the bounds a little bit for online. Not that crowdfunding is seen as all that novel anymore, but go back 10 years and we were starting to, when we were first starting to talk about Seedrs, the kinds of criticism we used to receive was largely based on the notion that how could anybody invest in a business without doing so in person? Like how are you ever going to invest without meeting the founders in person? And, we talked about, there's video technology and there are ways to do this and so forth and so on. And if you really want to meet them, I'm sure you can still reach out for a coffee. But it was seen then, I think, as being very unusual. It had become increasingly normalized, but I think that there were still a number of people as we came into 2020 who still would have felt uncomfortable with it. But now that all of our business seems to be conducted or capable of being conducted online, investment in private companies can too, I think, even for them. So certainly a significantly increased normalization, which helped drive, I think, a significant amount of growth. I mean, when COVID hit in March last year, we thought we were in for the worst. We battened down the hatches. We cut a bunch of costs. We thought it was going to be a shrinkage year in terms of revenue. In turn, it was a growth year, not a banner growth year. I mean, I think it at first there was some nervousness, and that may have hit our numbers a little bit. But by the end of the year, we were growing strongly. Our Q1 this year was by far the best we've ever had. It was essentially break even for us on our highest revenues ever. So we have seen, sort of as we've come through, the later stages of COVID, a huge amount of growth and activity. I think the other thing to be said is that it's had impacts on our portfolio, both positive and negative, the companies that we funded. I mean, it has had some negative impacts. We had some great businesses in the food and beverage and in the sort of, restaurant space and the hospitality space, that otherwise were going just fine and that have gone out of business as a result of COVID, and that's just inevitable. We've had other businesses focused on home delivery and other things like that. And, a personal favorite, the Cheeky Panda, which makes high quality sourceable sustainably sourced toilet paper. They sure had a boom back in the early parts of COVID. And so some of them have done well. So the mix of success and failure in the portfolio shifted. But overall, I think we've come out of this in a stronger position than we did, notwithstanding how dreadful the whole pandemic has been for so many people. Promise you I'm not saying this just for the benefit of Eurocrowd, but it is the European opportunity. I mean, I've had the opportunity over the last few years to work closely alongside Oliver and the whole team and some of the other members in helping to shape the ECSP, European Crowdfunding Service Providers for Business regulation. It finally comes into force this November. There already are and will continue to be sort of teething pains and challenges. But I think that to finally have 27 member states harmonized to a large degree and people able to operate on a truly cross-border basis. I've been excited about pan-European crowdfunding from day one. At Seedrs, we've done it on a very limited basis, but regulatory fragmentation has meant there's only so much that we could do. I think Europe, starting the end of this year and getting into the next few years is going to be a really exciting story.